Qantas shares slump after the carrier announces a lower profit but promises to spend more on customers. The federal government inadvertently sends the fee structure of 400 major businesses to their competitors, and Taylor Swift doesn't break the internet, but she certainly pushes the network to its limits. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Friday, the 23rd of February, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Friday already. This has been the quickest week ever in the history of the world, I've decided. Big call.
It's a very big call to make at the start of the show. You know why, though, Sean? It's because there's been so many big stories. When you look back at the week, and obviously kind of reporting season, there are so many stories happening anyway. But outside of that as well, we've had quite a lot happening even in politics when Parliament isn't even sitting.
It's great, isn't it? Fantastic to be a business and political podcast like Fear and Greed, weeks like this one.
Oh, absolutely. And you have an interview coming up, Sean, which I know I say this about every interview, but this is a good one. This is a must listen because it is.
The inference when you say this is a good one is that the rest of them aren't. You know that, don't you?
They are all good and they are all must listens, but this one is of particular interest to me because I love talking about planes and I love hearing about all things to do with aircraft and aviation, and nobody in Australia knows this space better than Jeffrey Thomas, who is an expert. He is a commentator. He's the editor of airlineratings.com, and he is your guest today.
He sure is. We talk about Qantas's result yesterday. We talk about Vanessa Hudson, the CEO. We talk about what's going on at Virgin, and most importantly for most of us, we talk about what's going to happen to airfares. A must listen, Michael.
It certainly is, because that is really the lead story today. Qantas has delivered a pre-tax profit of $1.245 billion, down sharply from last year. But the good news for customers, Sean, is that those airfares are falling and they are expected to keep falling.
The bottom line result is down 13% from last year when revenge travel helped the national carrier to record a record profit. Big investors said new Chief Executive Vanessa Hudson's first earnings was pretty good. Ms. Hudson said demand remains strong and she's heard the feedback from customers loud and clear about the need to improve service. The international business is now back to 90% of pre-COVID levels. The domestic business continues to be the biggest earner. Mind you, it didn't make as much money as it did 12 months ago. The loyalty business performed well. The freight disappointed somewhat, and strong demand for leisure travel meant earnings at Jetstar nearly doubled. Fuel costs were lower. Always a big cost for airlines, and there's a bunch of non-recurring costs that will actually fall out next year. Airlines are an expensive business. Qantas will increase its capital expenditure bill next year to around $3.8 billion. That's from about $3 billion this financial year. That includes 8 new A321s for domestic flying, but the new A350s, the long-haul carriers capable of Sydney, Melbourne to New York or London non-stop, have been delayed for about half a year. They're not expected to be delivered until the middle of 2026. Qantas, as Ms. Hudson pointed out, has listened to customers. It says that anyway, and it's spending money on new initiatives. There's been more spent on call centres, more on food and beverage, more on loyalty rewards, and better processes for flights that are delayed or cancelled. Now, Qantas will start installing Wi-Fi on all international flights from the end of the year. Good news there. And the carrier's Net Promoter Score, a measure of what people think of Qantas, has certainly risen sharply over the past 3 months or so.
You rattled off a few things there, Sean. It sounds like a pretty good result then. What did the share price do?
It initially jumped on the news, then tumbled all day to finish more than 6% down. So investors obviously weren't thrilled with the outcome. What it did do pretty well is thread the line between high enough profits for investors and low enough that government, unions and customers don't complain too much about inflated airfares. That is a tricky line to follow for Vanessa Hudson. Certainly, airfares are coming down and capacity is going up. That's how it works. More seats boosts competition, prices fall. Also, there just isn't the demand there was in the period after COVID. Market watchers still think there is some way to go, so prices will be lower later in the year, and that's both domestic and international. So that's good news. It's also part of the reason why the investors aren't that fussed on the result and selling off the shares. Very tricky for the CEO to work out that line between what the investors want and what the public want.
That's really been one of the themes, hasn't it, of reporting season? We saw that with Woolworths.
It certainly has in some of the more iconic companies. Commonwealth Bank got that as well. Less so in the big miners and things like that, where they're not so much consumer facing. There's such a backlash because interest rates are high, because the cost of living pressures, those sorts of things. Anyone that's paying out, like, Woolies is the best example of the lot, Qantas, Commonwealth Bank, they're the ones who are really feeling this squeeze between public relations effectively and what investors want.
That's fascinating. How did local markets perform yesterday, Sean?
The S&P ASX 200 finished the day flat at 7,611 points. Essentially, utility stocks did well, consumer discretionary and telcos not so much. Generally, the banks were lower, so too the big miners, but not Fortescue Metals Group, which reported. I'll tell you about that in a moment. Transurban, James Hardie and energy companies Woodside and Santos were higher. Origin, Xero and Coles also did pretty well relative to the market. But Woolies, Weiss Tech and Aristocrat Leisure were sharply lower. Now, Aristocrat yesterday came out and said the company's mobile first division, Pixel United, has signed a multi-year agreement with the NFL in the US to develop social casino mobile games. Be interesting to see what that actually means, whether that helps earnings too much. Not that investors were overly fussed, because Aristocrat Leisure share price ended down a couple of percent. But basically, at the moment, the market is totally dominated by what's happening in earnings season. Yesterday was one of the busiest days of this half year. Michael, by about Tuesday, it'll all be over.
Oh, are you looking forward to that? I mean, it's so exciting, though. I mean, we've been spoiled for choice for stories to talk about.
It's almost too much going on because you can't get across. It's really hard to get across everything. And then there's this lull immediately afterwards where corporates just aren't talking. And you have to get a bit more creative in your story selection then, Michael.
So basically, that's something to really look forward to, just to hear just how creative Sean Aylmer gets. Suddenly that's where self-interest starts creeping into each daily show. What story really grabs Sean?
Yeah, pretty much. That's it.
I look forward to this. International markets, what's going on?
Huge news out of Japan yesterday. The benchmark share index, the Nikkei, hit a record high yesterday amid a broad rally in technology stocks and chip makers in the Asia-Pacific region. Now, I know a lot of stock markets have hit a high recently, so why are we pointing out Japan's? Well, it last reached these levels back in 1989. It's taken 35 years to recover the losses. Back then, it was definitely a bubble economy. Nowadays, cheap valuations, thanks to a very weak yen, and corporate reforms are pushing money into the world's fourth largest economy, somewhat luring it away from China. That was really the big news, apart from Nvidia's result, which I'll tell you about shortly. Otherwise, oil and gold are fairly steady, so too cryptos. I can't help it. The Aussie dollar's buying 65.6 US cents.
Oh, you just cannot resist. And
No.
what was it yesterday? It was pretty much about that, wasn't it?
I think it was 65.6 US cents.
Yeah. No, look, it's got to be there. I think we can agree now. You must do it every day, and one day soon it might go to 66, or it might go to 64, and we will have some kind of a celebration for the movement. And that day, it's not today though, Sean.
Not today, no.
All right, we'll be back in a moment with the rest of the day's business news. Sean, up to 400 of the nation's biggest service providers, including law firms, consultants and accountants, are victims of a Department of Finance bungle after officials shared commercial in confidence fee rates and personal information.
Quite amazing, this story. The accidental release of the information, which includes contract details including fees across hundreds of competitors, was revealed after Finance Department officials last week emailed individual fee schedule updates to service providers, which included an embedded spreadsheet, according to a report in The Australian. That embedded spreadsheet had all this information about the fees being charged. This week, Finance Department officials contacted 236 service providers, telling them to delete the attached spreadsheet, probably like, please delete the attached spreadsheet. And if they hadn't looked at it, I reckon those providers would have said, oh, what spreadsheet? Better have a look at that one first. It's a repeat of a mistake by the Department of Health in November last year, in which health officials accidentally leaked the billing rates of around 400 firms to 22 service providers. I tell you what, I reckon those service providers will not be happy.
Oh, can you imagine the phone calls? They would just be absolutely livid.
Absolutely. And it just shouldn't happen. I do feel sorry for the individual who pressed send.
Yeah, completely agree. Now, Sean, French building group Saint-Gobain has lobbed a $4.3 billion bid to buy building materials company CSR. Now, I know I'm saying that incorrectly, and I also know that there will be someone listening right now that speaks French and will just be saying to themselves, what a Philistine.
Saint-Gobain. I don't know how to pronounce it. If you're out there, Mr. French person, please let us know. Anyway, after the news on the bid was leaked on Wednesday, CSR's share price jumped 20% and then another 5% yesterday to close at $8.36, which is still below the $9 a share cash offer. It's at about a 30% premium to the trading ahead of the leaking of the deal. The offer is subject to due diligence. CSR, which owns Gyprock, Monia Roofing, Hebel Lightweight Building Blocks and PGH Bricks and Pavers, is investing in factory upgrades to meet surging demand for housing. Its board told the 50,000 shareholders to take no action at this point, but it is interesting that there's just a few people sniffing around Australian building companies at the moment. Boral had a great result out the other day, and the Stokes family wants to take the 27% or so it doesn't own private. A lot of action happening in that sector of the market.
Yeah, absolutely. Now, Sean, there were a bunch of retail stocks reporting yesterday, and generally the tone was pretty positive.
Generally, accessory group Lovisa posted an 18% jump in sales in the December half, 12% rise in net profit. Basically, it's rolled out more stores. The result was better than expected. Share price was up 10%. Universal Store, youth fashion retailer is what we described that one. Revenue was high, but only because it did open more stores. Stronger performance in November and December came amid increased discounting, helping to move stock. Share price rose about 13% yesterday. Not so good for Maggie Beer Holdings, a gourmet food producer. Its bottom line tumbled, except to write down its Paris Creek Farms high-end milk and yogurt business. Its share price was off 6% yesterday. Eagers Automotive, which is Australia's largest car dealership group, lifted its final dividend on the back of booming new vehicle sales at its 200 or so showrooms. The group expects to add about $1 billion in revenue this calendar year from acquisitions, greenfield expansion, and a strong backlog of orders, which will take up to 12 months to run down. Net profit, however, was down, and its share price fell 6%. And Super Retail Group, Michael, your favourite, owner of BCF, Supercheap Auto, and Rebel Sports, posted an adjusted net profit of $145 million, down 6%. Those sales were up 3%. Investors weren't so fussed on it. Its share price fell 6% yesterday.
And some of the big media companies also reported. Sean, how would you say that sector's going?
Oh, meddling at best. I'm not sure what meddling means, but I'd say meddling at best. I'm a half glass full guy. Basically, Nine Entertainment, which is Australia's largest ASX-listed media company, said revenue was lower on the back of a weaker ad market. Underlying profit was off 15%. That's a fair chunk. Now Nine owns the Nine Network, Stan publishing assets, including The Age and the Sydney Morning Herald, radio stations, and a controlling stake in listed property platform Domain. Its combined TV and radio revenues and publishing revenues were all lower, while Stan's turnover was higher. Its share price tumbled 8% yesterday. And ARN Media, the owner of KISS and Pure Gold radio networks, says it's still fully committed to its proposed merger with rival Southern Cross Austereo. Revenue for the half year was down a touch, while underlying profit was off 13%.
You mentioned Fortescue Metals before, Sean. It was the biggest of the miners to report yesterday. Announced a 41% jump in first half net profit to $5.1 billion on the back of higher than expected iron ore prices.
Yeah, it's sort of the exception that makes the rule, Fortescue Metals, this earnings season. I'm not sure the rule is. It's certainly the exception to most of the other companies. It also announced a much higher dividend relative to a year ago. None of the others have done that. The dividend's worth $1.22 billion to the family interests of Fortescue chair Andrew Forrest and Nicola Forrest, who separated last year. Lithium miner Pilbara Minerals also reported its net profit, was off 83% on the back of a collapse in the price of lithium. So Pilbara Minerals is the biggest standalone lithium producer on the ASX. It averaged $1,645 a tonne for spodumene, for lithium spodumene. That was the price, $1,645 a tonne. 12 months ago, it was $4,993 a tonne, $4,993 a tonne. Just the fall in lithium prices is astounding, really. And obviously that's hit Pilbara Minerals, also hit IGO. It reported yesterday and said earnings were down 53%.
Just quickly, Sean, any other profits that you would like to mention? This is basically your free shot, your free kick.
Yeah,
Go for it.
I've got to mention Tabcorp. It posted a $637 million loss, dragged down by a major cash impairment to its wagering and media business caused by fewer people gambling and higher tax rates. What's interesting here, in New South Wales and South Australia, Tabcorp pays double the amount of taxes paid by online bookmaker rivals. It's a function of being a one-time monopoly in the market. The rules that apply to Tabcorp are just different. Now, the group's lobbied both the Queensland and Victorian governments to even up the playing field. It hasn't been able to convince the New South Wales and South Australian governments of that yet. Its share price tumbled 12% yesterday, and very quickly Medibank doubled its interim net profit, boosted by strong growth in its non-resident market. Michael?
Finally, Sean, as Taylor Swift starts her Sydney engagements, the numbers are out on what she did in Melbourne last weekend. Now, so she did 3 massive shows at the MCG. And over those 3 nights, this is staggering. Swifties, Sean, used around 35 terabytes of data. That's the equivalent of 15,500 hours of video content.
To consume all the content that went over the Telstra network across those 3 nights, you'd need to stream the Eras Tour concert film on loop for 1.7 years non-stop. Ridiculous. Basically, Taylor Swift fans used twice as much data than normal for a concert at the MCG. The peak of sharing content on the night was just before the opening. People uploaded videos they'd captured steadily throughout the night, but at the end of the 1989 era, when it was time for different surprise songs, downloads decreased and everyone actually started paying more attention. So rather than looking at their phones, they actually started looking at the singer. Traffic peaked again when the show was over as people started to order Ubers, check tram schedules, map their routes home, etc. But quite amazing, 35 terabytes of data.
Yeah, extraordinary. All right, turning to international news now. And US-based chipmaker Nvidia more than tripled revenue in the quarter ending January 28, taking the total to about $22.1 billion US, and net income, a measure of profit, was up 770%, Sean, to nearly $12.2 billion US.
This is the company leading the AI charge because it makes the chips that crunch the data in artificial intelligence models. The company also said that accelerated computing and generative AI have hit a tipping point, with demand still surging across companies, industries, and nations. Nvidia's market cap is now $1.67 trillion US, meaning it's the 5th largest company on Wall Street and really well within striking distance of numbers 3 and 4, which are Alphabet and Amazon. Pretty amazing story. It began in 1993 providing graphics cards for computer games, but it has only been in the past couple of years where it's really exploded because its technology is able to handle the heavy AI workloads. Its biggest companies are the tech companies who are pushing into AI: Amazon, Meta, Microsoft, Alphabet. Quite extraordinary how big this company is now.
It is just an amazing story. It just seems to keep going and going.
We had this discussion a few weeks about why is it called Nvidia? That's spelt Nvidia, and it's because NV was next version. So every time they were updating, they just kept talking about the next version. That's how it became Nvidia. There you go.
Oh, I've learned something from you. I mean, and I learned it in the final line of the podcast. Sure.
There you go.
I learned other things as well, but I mean, that's the one that I'm going to remember. Not saying that I don't remember other things. You know what? I'm digging myself a hole here, Sean.
Mm-hmm.
Up next is the Fear and Greed Daily interview with Jeffrey Thomas, aviation expert and editor of airlineratings.com.
Exactly. All about what's happened this week with the airlines, from Qantas and its result through to the CEO of Virgin, Jane Herdlacker, stepping down. It's quite amazing. What I do like talking to Jeffrey about is what's going to happen at airfares. That's where the good news is. You better listen to find out.
Yeah, and I love the fact that he did the interview from an airport.
Yeah. About to jump on a flight.
Yeah.
Very
It's
appropriate.
just all perfectly appropriate. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 23rd of February, 2024. Make sure you're following the podcast and join us online on LinkedIn. Check out all of our new videos and things on Instagram and TikTok as well, and find us on X and Facebook. We're pretty much everywhere now. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.